Episode 7. The most common trades the market actually gives you. If there's one truth most traders don't want to hear, it's this. The market does not distribute opportunity evenly. Some setups happen constantly. Others look incredible on screenshots, but barely exist in live trading. This episode is about separating fantasy setups from statistical reality, using Harmonia as the lens. The market is boring on purpose. If you've traded long enough, you've felt this before. You wait all morning for the perfect breakout. Nothing happens. Then a random-looking rotation pays more than the entire move you were waiting for. That's not bad luck. That's auction structure. Most sessions are dominated by balance, partial resolution, and failed attempts, not clean trend days. Harmonia exposes this by showing where price fails to commit, not just where it moves. The number one most common setup: acceptance, pullback, continuation. This is the workhorse. It's not flashy. It won't go viral, but it shows up constantly. Here's the structure. Price rotates around EQ. It probes the 10% zone. It accepts the 20%. Then price pulls back into that 20% area and resumes toward 50%. This is not a breakout trade. This is post-decision execution. Why it works? The market already chose a side. Weak hands get shaken out on the pullback. Continuation no longer needs urgency. Harmonia makes this obvious. Acceptance is tagged. EQ is no longer the target. Structure holds on retest. If you only traded this setup, you'd already outperform most traders. The number two most common setup: failed 20%. Rotation back to EQ. This one doesn't get talked about enough. It happens more often than breakouts, especially intraday. Structure looks like this. Price pushes past EQ. It touches, or briefly crosses, the 20%. But it fails to hold. And price rotates right back toward EQ. This is not a reversal trade. It's a balance resolution. Why it works? Acceptance never forms early participants. Exit, price returns to where trade actually works. Harmonia tells you not to force continuation. No acceptance marker. State remains. Rotation EQ stays active as a target. This is where discipline pays. The number 2-3 setup: turtle soup. Failed auctions at extremes. This is the setup traders love and misuse constantly. Turtle soup is not fading strength, guessing tops, shorting highs. It's a failed auction after advertising. Structure looks like this. Price extends toward 80%. Prior highs or lows break. Continuation looks obvious, but acceptance never confirms. And price collapses back into value. This setup appears far less often than social media suggests, but when it appears, it matters. Harmonia protects you here. Exhaustion. Context is visible. Acceptance never sustains. Prior structure is clear. You don't trade turtle soup often. You trade it only when the market overplays its hand. The number 4 setup: rotation scalps. Advanced only. This is where many traders get trapped. Rotation scalps exist, but they require strict risk, fast exits, zero bias. Structure. Price oscillates between EQ and 10-20%. No acceptance. Repeated probes fail. These are not trend trades. They are inventory adjustments. Harmonia makes this visible, but it does not recommend it for most traders. If you don't already know how to scalp, don't start here. What you almost never get, but everyone waits for. Let's be honest. These setups are rare. Clean breakout from balance, straight to 80%. No pullbacks, no rotation, no acceptance lag. They exist. They're just not the norm. Waiting for before them creates missed sessions, emotional forcing, late entries. Harmonia isn't designed for excitement. It's designed for reality. The hidden edge. Knowing when not to trade. The biggest edge Harmonia gives you isn't entries. It's disqualification. When you know acceptance hasn't formed, rotation fatigue is present, EQ is still active, you stop trading garbage. That alone can change your equity curve. From common setups to risk control, now you know which setups appear most, which ones matter, which ones are traps. But structure alone doesn't make money. Execution does. In the next episode, we're going to cover how professionals manage risk inside auctions, where stops actually belong and where they don't, and why perfect RR thinking destroys consistency. This is where traders stop surviving and start operating professionally.